Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Today was the Fed day. We did see some shenanigans throughout the last couple hours today. Not a huge deal though, but S&P is down a little bit. You can see 0.5%. I think Nasdaq is up more than 1% today. Semis positive. Dow about 1% down today. I think Russell did get hit today. Small caps are down, I think close to 2, -2. Banks got hit pretty hard. You can see it here. Banks got hit -3% on the XLF, but all the bank stocks got hit pretty hard today. Capital One is -8 there. The Wells Fargo -10. So it looks like some of these value stocks got hit hard. A lot of the large tech stocks caught a bid last couple of days. And then S&P obviously kind of right in the middle there. And so basically the value stocks, small caps, bank stocks, they've been getting hit. But they've been rallying pretty hard last couple of weeks while the, kind of S&P and especially NASDAQ, who's been just kind of paused and just didn't really made a big move in the last couple weeks. So it seems like just looking at the last couple of days, a lot of monies, a lot of funds were flowing back into the large techs, taking some profits from the value stocks, small caps, and the bank stocks, especially today. So let's kind of dive into it and trying to figure out what happened here. So yesterday we talked about that. What happened yesterday was the battle of the gaps, and I made a note yesterday that it would have been better. It would have been better for the bulls if they would have gone up and filled this gap, right? You guys remember that? And talked about how it's gonna be hectic in the next couple days because of this gap was not filled yesterday, right? So yesterday we gapped down about 1%, and we rallied for the 3-4 hours yesterday, failed to fill the entirety of this gap right here. And out of that, we did see some, selling pressure right there. And today we slightly gapped up, and then we saw a downturn, and guess where we found support at? That's my short-term moving average we've been talking about. And I'll go back, I'll kind of expand or zoom out to show you guys where this moving average is coming from, but I wanted to kind of finish what I was talking about. And then it looked like continued to sell off on the second hour. But you can see that we saw some buying activities right on that support, right on that short-term moving average, because that short-term moving average has been acting as support since mid of May. So about a month, it has been, acting as strong support there. I'll go back, I'll expand this chart or zoom out, and I'll show you guys. So we initially did see a little bit of a follow through there, and then the Fed minutes happened, and we saw the rally all the way through. And it's not a coincidence, it's not a mistake, where buyers pushed it, and the gap level did act as resistance again. So this level continues to making things hectic for the buyers. This is already second day bulls trying to fill this gap, and they were not able to be successful filling this gap. So as long as this gap remains open, it is going to make things hectic. This is already the second day after that this gap was open, which it was open yesterday morning. It's already making things hectic, despite the fact that bulls trying to bring it up, and that gap area acting as resistance, not able to do it. Bulls got tired. Bears took advantage of that, brought it right back down. Bulls trying to bring it back up again, but at that point, we already had that, falling downtrend, selling pressure at that point. So I think this was a moment that bulls needed to kind of go up and fill it. It would have been maybe better if this gap was already filled. Then I think there would have been a good chance where bulls could have kind of closed the day towards the high and potentially even going through, seeing a follow through tomorrow or seeing a gap up tomorrow, just because of that piece of information that this gap, if it altered the course of history, right? Now that that gap was, open, that gap was not filled. Now we're struggling beneath that place, which is 323 and 322. So let's zoom out here and let's talk about this short-term moving average that I have on. This is 18 exponential moving average setting at low. It is 18 exponential moving average, EMA setting at low. So ever since we gotten back above this moving average right here, May 15th, that moving average was on the money every single time. The question is this gonna be the same result this time around? Or is this time finally bears are saying that, you know what, we're tired of this. Let's break below it and kind of kill this momentum, right? So we don't know that yet. We don't know. This is the reason why I want to kind of take it day by day, because it looked like back in May 21st right here, because it was hanging around that vicinity for some time. Not only that, even this day right here. Can you imagine? That was a day when the market actually closed the day with a Marubozu last hour candle. Marubozu meaning it's all completely shaved. There's no wick, there's no upper wick, there's no lower wick, completely shaved last hour crap, right? Just right on, then looked like this thing was ready to fill this gap, even a gap down, right? I think a lot of bears are very, very excited. And if you go back and check my video, well, we still have to give benefit of the doubt to the buyers as long as, at least in the short term, as long as we are above this moving average, right? Things can happen tomorrow and we can shift our sentiment, the short-term sentiment, or the way we're looking at things, looking at the short term. Because tomorrow we come back, we'll have a little bit better idea where the price is. But even though the last hour we saw very harsh sell-off, just looking at the 65-minute chart, we still had to give benefit of the doubt to the buyers at that time, because we saw that moving average was still rising, that short-term 18 EMA setting in low moving average, right? And then bulls brought it up, gapped it over next day, and then we started dripping lower again, and we were there for I don't know how many hours. 1, 2, 3, 4, 5, 6, 7, 8, 9. Almost 3 days, I think, we're hanging out, but it was continuing. See right here, that level was just, there's a lot of wicks there, but we kept grinding and finally brought it back up. So same thing happened here. That's 1 hour, second, third, fourth, fifth, 6 hours we're in that vicinity, brought it back up. We came down, take it, brought it back up. So now here we got 1, 2, about 3, 4, 5, 6 hours, kind of in hovering around that vicinity there. So what do we say then at this point? Well, we say that benefit of the doubt still goes to the buyers as of today, as of right now, in the short term, because we're still above that short-term moving average. We'll get a better idea tomorrow. I'll tweet things out tomorrow morning. I've been actually tweeting a little bit today, throughout the day, kind of giving you guys an update on my oscillator on this moving average. So we may break lower, come down to 317 and retest that gap area. Or we see a move to the upside and re-challenge this gap area, or 320. See, we don't know that yet because the market is in a bullish trend in the long term, mid term, and short term. So we want to continue to give benefit of the doubt to the buyers. We did see some, again, the bearish momentum here in the, in the short term. We do see a little bit of lower highs here. We have not seen lower lows though. We have not seen lower lows yet. We might. We got lower highs like this, right? We have equal lows. These are all equal lows there. We do not have a lower lows. So I think bears really want to break this trend. We've been kind of consolidating here. That's more like a bullish pattern, conventionally speaking, but you know how these things go. Sometimes they can break out on either direction. They can break out either to the upside, it can break out either to the downside. But even if it break down to the downside, you still want to give benefit of the doubt to the buyers in the intermediate term and the midterm, because we have a whole lot of gap or whole lot of support at 317. And here's another reason why. So first of all, I wanted to kind of give you guys an update on this oscillator. So yesterday we talked about bears wanting to not find support in that. Bears did that. Bears definitely did that today. So bears broke up below this support. So we no longer have that buying pressure, right? That getting into the next level, right? And we surely saw this market truly got into second and third and fourth gear because it got faster and faster and faster. So it seems like with this oscillator coming down and looks like they're going to reset things, we're just underneath this support now, but we definitely gone below this one. So it looks like they're going to bring it back down maybe here, maybe the oversold level, maybe kind of reset that, because no longer we're in that zone where things are speeding up. And we definitely saw that in a price action where it got faster and faster, and the dip got shallower and shallower, right? We've been talking about the last couple of weeks. Definitely bears, breaking below that rising support on this oscillator, breaking that trend of things and trying to get back into oversold level, and then trying to figure out what to do, right? Because at this point, we do have a gap area. Even though that this rising support in this oscillator was broken, the momentum is still there. So what it's saying is this: we're no longer in that next level, next gear kind of momentum. So I think the market is now going into kind of a slower momentum. They're gonna try to figure out, because right now we're looking at 65 minutes. If you look at it on your daily, we are in that overbought sentiment. So I think at this point, let the oscillator reset, and market is trying to figure out, are we going to see some kind of a correction, right? Or are we gonna kind of consolidate in that vicinity before going up higher to fill the gap at 330-ish? And so I think that's going to be the next thing to examine and forecast, right? So we got gaps on both directions. We got an up gap here. We got the down gap from back in what? This is back in from where? That's from April now. That's from late April. That's a big gap down right here. That gap down is from April, late April. We got that gap down, but we got this gap up from where? Early June. So, and we're right in the middle of it. Are we going to come down, fill this gap first? Or are we going to go up and fill this down gap first? Which one? We don't know. We don't know. No one does. So we will get a better sense, better idea going forward. So we'll keep track of that, that short-term moving average. We'll keep track of that oscillator here, because once the oscillator get back down to the oversold level, and we can do a little quick analysis here. So you can see that that's the oversold, that's the oversold, that's the oversold, that's the oversold. We haven't gotten back down to the oversold level yet. It's been, again, almost a month. So if this thing comes down, fill this gap, it could happen either way. It could either come down, the price may come down and fill the gap. In that process, this oscillator comes down to that oversold level, or price could kind of consolidate up and down at above 317. That gap never gets filled, but it kind of hangs around, right? So there's a correction through time, there's a correction through price. If the market decided that it's gonna correct through time, you're still going to see this oscillator coming down. Because remember, we still don't have any pullback. Do you understand this? Because last time when we saw oscillator coming down here like this, do you know how much pullback we saw? We actually saw a correction of almost 6% correction when we saw oscillator coming from the top of its band, which is an overbought level, back down to oversold level. That was a 66% correction. Here, you saw the oscillator coming from top of its band almost all the way down near to the oversold level. How much correction do we have? Sideways. We do not have a 6% correction since the peak. We do not have that. We don't have 6%. You see what I'm saying? So currently, market has been correcting through time, moving sideways. This is not a good thing for the bears because bears were not able to materialize from this oscillator resting, from the weakness that you're seeing from the buyers. Buyers got tired. We also have that, what I like to call the oscillator double top, right? We broke that neckline and we saw the waterfall, but we don't see a 5-6% or not even 4% correction yet. And we don't have much room here until we get back to overbought level. We have some room. We have this much room right here. And bears want to utilize that, maximize that potential. I think the best bears can do with a little bit of a room left here in that vicinity is to bring it down and fill this gap. I think that's the best that bears can do at 311.14 to 311.44. That gap. If not, we start fizzling in this vicinity because, man, we are still holding above my short-term moving average. And remember, this short-term moving average does have a pretty impressive resume every single time. Not once it failed since May 15th. Not once it failed. Maybe this time is different. Nobody knows. So if I recap everything, if I try to summarize everything, if I can, put all this together in perspective, is this: yes, we are seeing some selling pressure in the short term, but we do have a bullish momentum in the long term. Yes, on the daily chart perspective, we are overbought sentiment. So I think the market is kind of waiting to see, are we going to kind of consolidate before going higher, or are we going to consolidate before going lower? So that's kind of what market is trying to decide. But above all of that, we still have to give benefit of the doubt to the buyers because we're in a bullish trend in the short term, mid term, and long term. Does that make sense? Market is never black and white. Never black and white. I've explained all the possibilities, all the sentiment, all the strength and weakness. But at the same time, you also have to know back of your head, okay, we see all those things, but we are still in an uptrend. So surprise moves still could happen to the upside while bulls are working with overbought condition in the daily chart of things. I know it gets complicated, but that's the market, man. Market is complicated, just like your life. Your life is complicated. When was the last time you saw anything black and white in your life, right? None of you guys still understand what love is, right? Market is never black and white. It's that complicated. So that's why, I can't never give you perfectly up. That signal right there is going straight down. I can't do that. I cannot give you that because market is never like that. So it will just give us a little bit of more information every single day, and we'll just know a little more every single day. And that's what we're trying to do here every single day. We're trying to figure that out and trying to benefit from the move. So I'll come back to you guys tomorrow, and we'll follow up. And again, you can follow me at 2K Kim on Twitter and Stock Twitch. And tomorrow I'll try to, if I see this moving average right here, if I see that moving average getting, it gets broken, I'll tweet that out, let you guys know. And then, 317, that will be that gap area support. If that gets broken, definitely going to come down and retest 317. And I'll tweet things out here and there if I see something happening tomorrow, any kind of developments that is worth tweeting about. So you guys enjoy your evening and good luck trading tomorrow.